that has legacy.
Hi everyone, welcome to a live episode of Dubai Works Business Podcast. This week I'm joined by Will Hutson. Will is the CEO and founder of Team LMTD, a leading digital agency in Dubai and Abu Dhabi. He's been at the forefront of many big campaigns and digital innovations over the last 8 years. He's also a mentor and was Arabian Business Mentor of the Year in 2018. He's a board member and board advisor for a number of charitable initiatives and an all-round good guy. So, Will, welcome to the show.
Thanks for having me, Richard.
Good morning. How are you? Nice setup. You're working from home, obviously.
Yep. As of today, day 35. We pulled the trigger early on isolation. And doing okay. Getting a little cabin fever, but we're doing okay.
So getting straight into it, obviously work from home is part of the impact of coronavirus and COVID-19. How have you been prepared for that? Was it something that came as a shock to the system?
I mean, obviously, I think global pandemic fundamentally comes as a shock. But in terms of your culture and how you operate and how you communicate, there are little things you can do to prepare and get lucky. We feel like we got lucky in some of those ways and didn't get lucky in other ways. Our culture is very much about communication, getting together, and solving problems for our clients. That's kind of like our organizing idea. We feel like we want to work with smart people, solve problems, and for us, the way we solve those problems is through social and digital media. That's it. So a lot of that kind of unique identifier was taking place in person. But about a year ago, we started working from home the last Thursday of every month. Just proactively, we wanted to try it. We had read a few articles on continuity. I had no idea this was coming, but on a monthly basis, we were forcing our whole team to work remotely. And it kind of gave us a lot of insight and a lot of lessons onto how to organize meetings, how to create accountability, how to tighten our process, how to shorten that feedback loop so we get more concise decisions when we're remote. And I think because of that, we've been in a good spot.
So you actually changed a bit of the kind of reporting structures and a bit of how
Absolutely.
you work, a bit of the communication approaches.
Yep. It's definitely more of a show your work type of scenario. So let's say if in agencies, it's all about workflow and division of labor. So you've got a client here and you've got a person that's executing one piece of a solution here. You can have 2, 3, 4, 5 layers between everybody. And by the way, on the client side, there might be 2 or 3 or 4 layers as well. So one of the quick things we did was tighten up our feedback loop. We definitely have used WhatsApp. We've used Slack. We've used kind of very simple, cheap and easy channels to be able to get concise, consistent, real-time feedback into the whole team. And we also force the account team to say, hey, here's where we're at. Here's what the update is to everybody involved in the process.
And, you mentioned continuity. I guess we all don't have big documents on business continuity plans in place, and we all don't have pandemic insurance like maybe Wimbledon had out. But so how the Q1 2020, and we're now in Q2, and you're at home since March, the beginning of March. How has that impacted your business? And, what's the overall size of Team LMTD at the moment, and how has it impacted?
Yeah, so we're at about 27, 28 people today. And what I will say is we had some new joiners a week or two before we worked from home. And so that's been really tough on them. And my heart goes out to them. They've only had a couple of weeks working with the team in person before shifting to working from home and being remote. And they've done an incredible job, all things considered. I'm really proud of them. For us, I think some of the things that set us apart is we work in digital and social. So our business is fundamentally able to be done remote. I think on the other side, we have had to start conversations with clients that really want people in person, people to be embedded, people to be in front of the client, kind of as that insurance policy for them in terms of the work and the resource allocation. And so I think there've been tough conversations, but I think they've gone well. And it's mostly focused around trust. Do you trust us to get this accomplished with the resources that we've allocated and with the brief you've given? And I think we've done well there. In terms of plans, no, we didn't have pandemic insurance. And for us, this was not an absolute, disqualifier. Wimbledon, it makes sense. If you cannot have the event, the value is the event. It's like, I don't know, 70-80% of their revenue outside of the event. It's just kind of an annual country club, right?
Yeah.
So for us, we really, exactly. So we really tried to focus in on where can we grow, what are the value adds, where are the opportunities. We knew coming into quarter two, it was going to be a very difficult and dynamic quarter anyway. I think having this rolled onto it has made it more challenging, but we'll see where it goes.
Interesting. And just talk some of the solutions. We often hear about, the response campaign ideas that brands are coming up with. Have you seen that trickle into effect, or are a lot of things on hold marketing wise?
So, no. I mean, I would tell you for some of our larger clients, especially the government clients, it's business as usual, if not a big uptick in tempo. So about a year ago, just for context, we resigned our last consumer-facing client. We have one other consumer-facing client, but 95% of our business is B2B, healthcare, and government. And so they're very anti-cyclical businesses. Government continues as normal. B2B, actually, a couple of our B2B clients are expanding. And healthcare, for obvious reasons, is still business as usual. I would not say healthcare is growing, though. A lot of their resources are put towards fighting COVID-19. So, I think for us as a business, we really think that our focus has helped us. We think that our clients have had a very straightforward message. We help this way. It has not been about virtue signaling. It has not been about a grand gesture. Another example is we have a client that's a port and free zone operator, and they did a really interesting global call for all the ports in the evening to lay on their horns as the ships were coming in or setting off. And that's kind of within their community spread naturally and organically. And you have ports around the world now every evening laying on their horn and recording that and challenging others for a Horns for Hope or Ports for People initiative. So that's been really uplifting and great to see. And obviously with the healthcare clients, they're on the front lines. This is tremendous amount of pressure and strain. So a lot of what we've tried to do is almost more internal communications. How can we get the channels and the audiences to help uplift the workers on the front lines?
Amazing. So in one way, you're positioned quite well for this type of work and what's needed right now. Looking on your website, you've got a host of household name brands there, such as Etihad, Adnoc Distribution, and then some cool ones like Dubai and Jetman and even Careem and Etihad. So how does without going into too much detail about how a digital agency or creative agency works, but what does a pivot or a positioning pivot in terms of clients, like going to government clients and healthcare clients, what does that look like internally and then externally?
Yeah, so I think there's two sides to it. I think the first side is luck and timing. And when I came to the market, when I first visited in 2011, I met in a week what ended up becoming 4 or 5 of our first clients. So out of the 20 meetings, we ended up in that first year closing 18 or 20% of that pipeline, which is unheard of. That does not happen. But we came in with a really dialed in message. We didn't overprice ourselves. We priced ourselves pretty aggressively. And then really it was about recruiting the right folks, building the right culture, and then delivering the product. And so for a lot of those initial clients, like Etihad, which we had from 2012 to 2016, that was really about kicking off all of their social channels and about growing them internationally and helping them open route launches. When you have folks like Dubai, you just get out of the way. They've got all of the firepower. Dubai Film is probably one of the most qualified production houses in the world to shoot the type of work that they did. Wow. And so our goal is just to try to help put the idea in a box and make sure people didn't steal the content and make sure they got credit for the views and we could retarget them efficiently. And other brands like Careem, it's really been driven along the guidelines and the fundamentals of relationships. We get to work on great campaigns with great leaders there and be a part of that team in one-off spots. It's been a blessing, and we feel really lucky to have the success we've had.
Amazing. And you started really in 2012. What sort of, you're coming up to a nice milestone that we touched on it off air, which is 100 million dirhams of revenue, which is incredible, really. And it's kind of a nice kind of success story of a creative digital agency in Dubai. And also, you're based in Al Sirkal, and it's very kind of a community story as well. How much of kind of being in an artsy area adds to the kind of creative output in the field of the agency?
So look, I think we didn't want to do things. When I visited some of the other free zones in 2011, and then when we started in 2012, I didn't want to do things just because. And I felt a phenomenal connection with the way that the Abu Dhabi brands and institutions were trying to grow, and their ambition and the stories they wanted to tell. And the way they organized their business was very similar to how my mind thought and the way I recruited, the types of people I recruited. And so we actually incorporated first in 2454 in Abu Dhabi in 2012. And they gave me, a few months of free rent, and they would pick up the phone and call people in procurement, and they would do other things to really help us get ingratiated with the Abu Dhabi brand. So that was very helpful. And then from there, we would work, a lot of days we worked out of Make in Dubai. A lot of the team members were based in Dubai. So we were going back and forth almost every day, and we'd work out of Make. That was our kind of...
That was Make Business Hub in the marina for people who don't remember it. Yeah.
Yeah, I think we met there. And it was founded by Laith Matthews, a really dynamic entrepreneur in the region. And so that was really fundamental to okay, I moved from New York. Previously, I'd been in LA almost 7 years. I did not want to jump into a hyper corporate environment. I wanted something that really connected with me, who I was, the culture I wanted to create, the people I wanted to work with. And so when we connected with Al Sirkal and we worked on a really interesting campaign around the Kuz Arts Fest, we were like, this is our home. We have to get an office here, and we have to grow from here. Outside of that, I really think it was about trying to find the right way to recruit, retain, and grow really bright and energetic people. I can't take a lot of the credit. I created the right environment, and I took risk. But outside of that, our team, the people who have come through our doors over the last now 8 years, this June, they're really the reason we were able to hit this revenue milestone. I don't like vanity metrics, but it is a nice round number. It feels good. And considering that, we've never taken VC, we've never taken outside funding, it feels like, something pretty important.
Yeah, it's interesting. It's also, it's incredible really how much digital has changed in those 8 years. And to, if you looked into the detail of that 100 million dirhams, I'm sure there's so many different skill sets, platforms, technologies, ideas. Digital is complex, Will, right? For people who aren't in advertising, getting into advertising and knowing how the industry works is one part, but knowing the nuances of digital advertising is really complicated.
Yeah, I think one of the things that served us well is we try not to have a set opinion. One of our first strategists and then lead strategist who actually built a really cool ad targeting unit for Facebook. When we had Etihad, we created expat targeting. And then he ended up going to work for Facebook. He's still there. He's in their headquarters in California. He would always say strong opinions loosely held. And so, prove it, show us. So there would be times where we'd go into a meeting with other agencies or with a client. We'd say, these are our opinions. This is what we believe in. Here's why we need to shift spend here, here, and here. And if we couldn't back it up, we'd say we were wrong, or vice versa. We'd say, 6 months ago, we thought you needed to shift spend into Facebook, but now we think it's Instagram, and now we think it's YouTube, and now we think it's Snapchat. So I think not having a hard and fast, this is the way it is, this is the way it's always got to be, saved us. I think on the other side, the unit economics on how we built our business, we weren't dependent on a media rebate. We weren't dependent on so many other people having their business models protected in order for us to be profitable. We had to do good work. We had to make our clients happy, And then we had to have incremental growth within our contracts, within our revenue, and then obviously within their businesses. And so to go back to the pivot question, I think that's also why we ended up focusing on healthcare, focusing on B2B, focusing on government, is because that was a very achievable thing to prove in digital and social. If you're in FMCG and you're talking about how do I get people to buy a chocolate bar, the person who's buying that space on the shelf at a Carrefour is always going to take more credit for that purchase than you're going to be able to take, unless you have a viral video or a campaign that goes big. So for us, there was a very clear way for us to say, we did this happened, this is what we can take credit for. And that creates a really positive, really symbiotic feedback loop with the clients in those industries.
That's fascinating when you put it into context with people trying to do attribution around e-commerce and performance. And you're totally right. It's very hard to as an agency or as a service provider that's marketing, to tell whether it's a multinational or whether it's a restaurant that you drove these customers here. Even if you can track it, they're the ones preparing the foods, they're the ones who created the concept and all that sort of aspect. But, just touching on the point you mentioned about roster agencies and different services, because being a full service creative digital agency, there's so many aspects involved in that. There's the concept, there's the platforms, there's media buying, there's creation, there's actual web development, of which you do in-house. How do you navigate that in terms of communication with your clients?
Yeah, so I think, and to be clear, it really depends on the digital project. We do have development partners we use for, I would actually say the majority of digital we do now from a building perspective is out of house. We will design, we will conceptualize, we will strategize. And then we do some in-house as well, just to be clear. I think for us, the idea and the brief is really what drives everything else. So if we have a very structured brief from the client, we really understand their audiences, we really understand their goals, and we feel like we've got a fulcrum that we can kind of lift and achieve the outcome, the right incentive, for instance. I got to tell you, for a lot of the healthcare clients, it's been very, very hard for them to go with more information about COVID-19 to their audiences and try to set themselves apart. So we've had to spin that on its head a lot and say, well, what makes your institution unique? What is the value add of your institution in this Emirates defense of COVID-19 or response to COVID-19? What is the thing that sets you apart regionally or internationally about how you're responding to this? And then try to build something that's really unique, really bespoke for them. And that's come with mixed results. I think a lot of times you have to have tremendous buy-in from the client side where they kind of raise their hand and they're like, we get that you're the right person to solve this. And that can be very political. And even going back to attribution, this starts in-house as well. You have to have tremendous buy-in from the client side to say, okay, we're willing to be objective about our blind spots too. We're willing to be objective about how we model or how we pass a lead off internally or how we attribute things internally as well. So I think it really does start with the brief. It starts with, what are we trying to solve? And then from there, it's about timing. It's about having the right people together. And really, the best idea today is the one that you can get launched. If you're sitting on good ideas and good creative for a better time in the future, unless it's something that is tone deaf and doesn't make sense within the pandemic, I think you should be communicating with your audiences. I think you should be there talking about what you're capable of. I don't think you can just flick a switch off and go away.
I love it. I think, the concept and the creative idea is at its essence the core of marketing services, especially in the creative industry. However, often more emphasis is put on execution, and trends evolve from that. We've seen in the time you've been here, we've seen social media specific agencies grow. We've seen influencer marketing agencies grow really fast. Do you think that there's enough value put on the core marketing idea, or do you think more is, why these trends are allowed to grow is because it's more about the execution and what people can see?
Yeah, I think your thesis is completely correct. That clients and customers in the Gulf value execution because they can see it. It's something that they say, here's what we know we can do in-house. If you can do this cheaper than we can do it in-house, CapEx, OpEx, we're going to go with you. And then you have to do it at scale, more efficiently, with lower cost base, et cetera, in order to make that margin that they can't do in-house. So I think that's fundamentally, it's easy for procurement to understand, for decision makers to understand. But I think if you go one step further and you look at how big companies and just in general companies in the Gulf have purchased professional services, they don't take a step back and say, who's the best person to solve this? They go, who can solve this? And if it backfires, I don't get in trouble. That is when the management consultants come into the mix. That is when the big agencies come into the mix. And your SMEs and your boutique agencies kind of get pushed aside because we're seen more as sometimes, and especially in times of crisis, as a risk. So I think we have to kind of fight up that value chain to get access to C-level executives, to get buy-in from C-level executives, to say like, hey, a McKinsey or an Accenture handling your social media strategy. I have one client that has a Big Four company that is literally only known for auditing, and they're doing the marketing plan for them. And that's for me, like, I would have done that for free, right? I would have done that to get a seat at the table off the back of all the other contracts I have with them. And so that's really disheartening. And I think that, you wouldn't see that as much in the West. I don't think there's buying brands and buying labels as much in the West. You'll routinely see, and you can see it actually, Google forever worked with Essence before they were bought by WPP, right? Amazon worked with them. Facebook works with boutique agencies all the time. So I think there is if you know and you have your blind spots figured out, you can see real value in the SMEs and the boutique professional services folks way, way, way beyond what the management consulting firms can do and the global partners can do.
I think, what you mentioned about seeing things and valuing that resonates with me. But however, it does take courage even to try it, even if you don't want the blame. It takes courage to kind of see something and wanting to do something innovative. And I think a lot of companies, especially in the last decade in the UAE, have been very good at that. Just touching on kind of WPP and the global outlook for this model, of which you're an independent company in that wider ecosystem. What's your view on where we are, the status quo for advertising?
Well, look, I think, the prevailing trend for, depending on the business, 10, 15, you can even, for WPP, go back maybe 20 years, has been to value these businesses off of their media and off of their top line run rate. I think that's insane. They don't have a lock on their customers. Their customers, can't exit a lot of these agreements. The switching cost is pretty low relative to the value that they add to their bottom line and to their market capitalization. I think
can you just explain that a bit more? Just the customer part about being locked.
So, if you are a big holding company and you've got a large automotive client in the Gulf that is spending with you, let's say, 30 million dirhams a year, in theory, you would derive your value as a business in the stock market off that 30 million number. Not your profit, not your loss, not your gross profit or your net profit. And that was the prevailing idea for a very long time. And, they would tell the stock market, it's really difficult for this automotive company to leave us. It's really difficult for them to do things in-house. And the reality is over that time span, two things have happened. One, investors have started to see that, it's a bit of a fallacy to think your top line revenue equals your profit or your value. And the other thing is, I think investors have seen that client, it's a lot easier for them to walk out the door than not. And in parallel to that, the big holding companies, and there's a really famous quote from Sir Martin where he says, hey, our biggest value, our biggest, differentiator is our people. And they go out the office and down the elevator and out the door every night. And I have to get them back in here. I have to get them to work for us and not Facebook and not Google and, not Twitter and a lot of these other dynamic platforms that have stock options and, a sushi counter in the office and everything else. So I think that when you juxtapose those two things, I think the franchise value, their ability to extract value out of their professional services and their clients diminishes. I think in parallel to that, you also have the rise of the duopoly. When the majority of money being spent by brands is coming from Facebook and Google and their associated brands, it makes it way harder for them to be able to get rebates, for them to be able to have negotiating power, franchise power, all these different things that they could do when they had 1,000 publishers around the world, or 2,000 print houses, or 500 TV stations, right? So then there was the ability for them to middleman and to take a piece of that. As that slowly diminishes and the values of those associated medias decline, I think their businesses get harder and harder to justify at scale. So I think you will see the management consulting firms come in and pick off certain brands, pick off certain expertises. I think you will see some of these holding companies maybe even delist. I don't want to say any names, but there was a really great creative agency based out of UK and Europe. And I watched their enterprise value go down like 85% in the last 6 months. And that's heartbreaking. This is an agency I looked up to growing up. So it's really tough times for them.
It's interesting. So delisting can become private, and it can be a turnaround story, and it can be a positive. Do you think there's a greater problem outside? You're an independent agency, but the majority of marketing services are owned by holding groups, whether it's Publicis or WPP or other holding groups, IPG and others, and they're all listed as you mentioned, but they've announced cutbacks this week regarding staff and salaries reflecting COVID-19 and the advertising outlook for the year. We've seen Olympics postponed. We've seen the Euros, European Championships postponed as well. However, question is, a lot of them are in debt. They're heavily in debt. Is the model broken? Are we going to see a different structure, whether it's consultancy companies? Are we going to see a different model for the future around marketing services?
So I think there's two sides to this. I think one, it's not that the consultancies don't have debt. I'm sure they have debt as well. I just think the fundamentals around their business and the way they structure and the unit economics around their business are more aligned with growth and the dynamic nature of these purchases than the holding companies are. They don't have as many blind spots to the duopoly emerging as WPP or any of the other folks might have had over the last few years, which, by the way, I think WPP under their new CEOs made some really, really smart moves, and they've really consolidated the business a lot. And I think Reed has really focused them on digital and some businesses where they can compete in a big way. So I'm not negative on the businesses at all. I'm just saying I think they have tremendous pressure. In terms of like marketing services going forward, I think that the odds of the majority of companies buying the things that they used to buy is declining every quarter. So I don't see FMCG buying out of home or buying TV or radio the way they used to. I don't see that being when they wake up in the morning, they think I have to have, this billboard on Shakeside Road. Those days have slowly changed. And you see this, you've seen it for a long time throughout the US and Europe. That doesn't mean that out-of-home isn't valued. I think digital out-of-home, dynamic, programmatic out-of-home will be much more valued and preferred. So you can spin it up or spin it down depending on a lot of other things that are happening for the brand below the line and online. I just think they don't want to be stuck there with a huge investment. I think they want to be more dynamic. I think on the other side, the way big brands buy marketing services is going to change as well. It was a huge deal when one of the big FMCGs brought in a head of digital from their corporate in Switzerland here. And everybody's like, oh, he's from corporate. Oh, he was trained for a year in digital. Well, now everybody in that business that I meet, they're strong in digital, right? Everybody that I meet in the big beverage companies, they're strong in digital, right? I think the next phase for a lot of these FMCG brands, for instance, is going to be e-commerce. I think the next phase for a lot of these B2B brands and governments is to move into more of a newsroom style and to kind of be more dynamic in how they publish, how they originate stories, and how they tell stories. So I think that's kind of the two outputs, and that's going to require the clients to be way stronger from a capabilities perspective, way stronger from a project management perspective, way stronger from a voice and a tone and a messaging perspective.
Interesting. So to summarize, and not to summarize too,
Sorry.
not to dilute anything what you've just said, but I get the sense that as digital advances and becomes more nuanced in terms of content skill set and media buying and programmatic skill set, there will always be a need for the likes of LMTD and different services agencies.
I definitely think so. I just think it's going to depend on how they integrate with the client. That is for us, and that's why we picked the clients we did, because the protocols, the way that they like to work, the flexibility that they want to see from an agency, we're comfortable with. And on the other side, the ambition that they have, the way they want to grow, the way they value professional services, we appreciate, right? So it's a real win.
So before we talk about a lot of the things you do outside of your day job per se, I know the topic of SMEs and funding is close to your heart and something you're passionate about because we've discussed it at length before. Can you talk about the journey that you've had as an SME, as a startup and an SME, as a small medium-sized company here, and what do you think the support system is for companies like yours?
So obviously, when I started the business, I didn't know how daunting it was to do what I was doing. I was just naive to everything. I moved here when I was 31. I just turned 40 last month.
Happy birthday.
Yeah, thank you very much. The journey has been completely eye-opening. And, the question that people ask me a lot is, if you were to get the same opportunity today, would you do what you did then? And the short answer is absolutely not. I'm very happy with where I am and the business we have and the team we have and the structure we have. But I think the risk reward for the type of business I built in those first few years justifies where we are today. I don't think I could do that again today. And let me explain. I think then I had the ability to, in essence, not get paid for years, not take a partner ever, and to really just kind of crash with a bunch of friends in an apartment, also coworkers a lot of times, and just kind of scrape by month over month. I mean, there were times where we were very month to month, sometimes for years, and there was really I didn't know of any other way. I hadn't really researched, what does it look like to start an agency from scratch, in the US or Europe or these other places. And over time, I started to realize that, it's not normal for the vast majority of my profit every year to be out in the market with my clients. It's not normal for an invoice that's net 30 term for days to be paid in 90 days. I just thought this was what we did. And so, for me, the two big revelations have been working with a peer-to-peer lending platform called Beehive, which has really helped us many times. Obviously, it has limitations as well. They have to manage their risk. And then the other side of it has been really trying to openly engage. And, my experience as a mentor with startups and SMEs over the past 8 years has been, not just focused on the UAE. I've traveled probably 30, 35 times around the region working with WAMDA and Mix and Mentor and a lot of their events. And the message is the same thing. We have a profitable company. We want to grow, but we're not going to be able to expand. They can't sell receivables. So receivables financing, that means money that I am owed from my client, I can go sell to a bank at 95, 98, 99 cents on the dollar. That doesn't exist for the vast majority of folks in the region. They don't have the ability to have decent term debt. Debt from a bank generally is 17, 18%. Beehive, you're going to look at anywhere from 9 to 13%. Still way, way higher. And by the way, term debt with a bank is going to be 3-4 years, sometimes 5, and Beehive is going to be at most 2 years. So if I want to acquire a competitor, if I want to expand into a new market off the back of a receivable or an actual client, I can't do that. And so then I have to go into the existing groups that invest in startups and things like that, and I'm a services company, right? I'm not as desirable as the next Careem or the next Soup. So that really has put a lot of great, fantastic, profitable SMEs in this blind spot for the market. And so for me, especially now with everything going on with the pandemic, my real mission is, how can we find ways to get SMEs funded? And I think the short answer is we need to create a debt market. We need to help de-risk the banks. That does not mean we give money away for free. That does not mean we become the lender of last resort or the government does. But we do need to find an in-between where real businesses that make money have access to real term debt that allows them to grow and expand.
Wow, very well explained. Thank you. I think I understood about 70% of it, hopefully. But when you say, I want to touch on a few of those things, but just the last bit, when you say we, who are you referring to?
Right now, it's just other volunteers. This is not anything remotely formal. I'd love to build a business around the debt market that's powered by tech, that uses a lot of the great things that the free zones like ADGM and DIFC are toying with in their sandboxes. But right now, it's just a bunch of volunteers that are reaching out to the regulators, they're reaching out to the banks, and they're saying, got to help the SMEs. The SMEs need your help.
So a debt market is can be crowdfunding, or it can be something that's backed by regular debt that's backed by collateral.
It's literally as simple as this. When banks lend money today in the Gulf, they are taking usually 100% or 98% of that risk. The rest is a bit of a spread with the central bank. In a lot of other markets in the world, they do not take that risk. So in Europe, France, for instance, banks are taking at most 5 or 10% of that risk. They will sell off, they'll syndicate the rest of that debt to other buyers of debt. Sometimes the European Central Bank, sometimes it's going to be insurance companies, sometimes it's going to be a large sovereign fund, sometimes it's going to be IMF, I don't know. But other people will buy off that risk. We need a market that allows the bank to take less risk. I'm not sympathetic. A lot of our banks have been historically very profitable, but I am empathetic. I understand the position they're in. I understand that it's insane to take that much risk without a really good interest rate. I get it.
Yeah, interesting. So I didn't understand that it was such a unique issue for here. I assumed that it was everywhere around the world. But we talk about there's a Hamad bin Rashid Innovation Fund, and that the interest is a third of what you mentioned from regular bank, but it's backed by member banks. So it's that sort of collaboration. It's a type of debt that you're talking about. So it's good to see that there's some types of opportunities there.
Absolutely.
And it's great that, I guess you're a champion for further opportunities, because you're not on your own, and it's not isolated. It's not siloed in marketing services. There's different terminologies for SME, but there's especially at the moment, we're seeing a lot of kind of small businesses and local businesses that maybe mightn't even understand to the detail that you do of this challenge. So it's great to hear it.
For me, I fundamentally believe in the power of entrepreneurship to change the world, fundamentally. And so that has led me on a really interesting adventure here. It's opened my eyes to the challenges of emerging markets, which, to your point, debt markets are a huge blind spot for emerging markets. And it's actually, if I'm able to be frank, it's really floored me with the vision and the leadership that the UAE and actually a lot of the GCC countries have had, trying to reinvest in their youth, trying to build more of a social safety net, and trying to build real diversified economies away from oil, which is, I think, why this is so important to talk about now. This is an existential issue. If the borders open and entrepreneurs leave, so much of the soul, so much of the efficient job creation leaves with them. And we need to send a clear message to all other entrepreneurs. The UAE is open for business. The UAE is here to support entrepreneurs and founders. And the UAE believes in small business. And I think they're doing that. I think they're doing a good job there. And I just want to make sure that message gets across loud and clear.
Because it's fascinating when you think of it. We often think of startups and entrepreneurs in terms of investments and seeds, angel, ventured, private types of investment. But the challenges that you're talking about are your own investments, your own profits, work that you've delivered, being able to put back into your business, whether it's to develop that new technical service to improve efficiencies, whether it's to move into another market, as well as Abu Dhabi and Dubai that you're in, and then also to reinvest in your staff. So it's fascinating to look at it from that point of view.
And by the way, if you look at it from a market, sorry to interrupt, that venture side of it it's low double digits. The vast majority of the issue is with the SMEs. Now, the venture side creates a powerful narrative. The venture side creates outsized returns. The venture side is fundamentally important and needs to be focused on and nurtured and cultivated. But the SME side can't be left to languish. And it would be one thing if I was saying, we need to have huge debt to income ratios or some wild multiples on the back of services companies or trading companies. I don't want that. But I do want funds available if I want to buy my competitor out, or if my competitor and I want to merge, or if I want to do a management buyout. My team, I love my executive team. I'm passionate about SME debt. I'd love to de-risk myself and go focus and volunteer around that and maybe some other charities and spend the next decade of my life doing that instead of services. And I don't have an instrument. I don't have a bank that would come in and do a management buyout for me. And again, I get why the banks won't do that. I don't think they're a villain. But I think there are structural reforms that we can do to make sure the banks have what they need to be able to make that loan and still do it safely. And I think if we do that, the GCC flourishes, right? It flourishes.
That's amazing. Yeah, I think it's very aligned with our view on Smashy. We say, just a plug, but we say for the driven, the dreamers, and the doers. But it's amazing because I didn't know it was so aligned with the kind of mentorship and what you do in terms of believing in this region, the Gulf and the wider region, in terms of the opportunities, and not just in startup, but just the wider kind of spirit of people wanting to work. And you're talking about money that's on your balance sheet. You're not talking about access that doesn't exist. In terms of valuations, and this might be a bit beyond me, but in terms of, limited understanding, if I'm getting a mortgage out, I can get lower interest because there's a property against it. If I'm getting a business loan out, there's nothing backing it, one side of what you're talking about, and it might be 5 times more higher interest. But how could we value businesses, and how can we value IP, and how can we value talent to act as collateral? Is that a possibility?
It is. And I think the fundamental driver around anything like valuation, Richard, is threefold. It's access to capital, it's demand, and it's supply. That's it. That's what drives valuation. If tomorrow everybody wanted to operate coin machine laundromats, right? And those have been out of favor for decades, but there's only 20 in Dubai, the value would go up because everybody wants to buy them. If inflation took hold and money got cheaper, right? Like we're pegged to the dollar in the UAE, and we have more money than we did previously, and the euro is dropping, we can go into Europe and we can buy cheaper than we can build here, right? That's right. Access to capital, demand, and then supply. And that's it. So I think we need to very carefully create just enough demand and this is a time where people are going to be more reasonable with their expectations of exits, more reasonable. I'm telling every SME, by the way, I'm also eating, my own my own advice. I'm taking my own medicine. Reach out to your competitors. Reach out to the people that you wouldn't normally talk to if it's a competitor or a tertiary trade partner, and say, hey, how are we going to get through this together? Is there a way that we can work together? Or we don't even have to talk business. Let's just have each other's back. Let's start there. I'm going through something that you're going through. I understand it in a way that no one else can probably understand it in your life. Let's find a way to work together. And I've done that. I've talked to a few of our competitors. I've talked to a few of our tertiary kind of trade partners. They do similar services, kind of more complementary. I think coming out of this, you should see consolidation. You should see roll-ups. There will be demand there. There will be need there. It's just a matter of, will we have the access to liquidity? Will we have the access to capital to do that?
Will, what does mentorship, what is a mentor?
Wow. I think a mentor is someone that can come into the life of a person at a time when they're ready to get advice. Not that they need advice, but when they're ready to receive and get advice. I think that is a key, and they have the right message and the right perspective to be able to do that and not take credit for it, not want credit for it. They're just the right person at the right time to come there to uplift them and say, you got this. And that could be accountability. That could say, hey, you're blind to all these things. You got to treat your employees better. It could be accountability in the other direction. You've got to look out for yourself. You're not taking care of yourself. You're throwing yourself into this business. Take better care of yourself. Be objective. Separate yourself from the business. It could be, you're going through an exit. I've gone through a couple different, potential sales. And what I've learned by not selling, I've then turned around and helped many other businesses that went on to sell or went on to raise, and how they structure that, what the terms look like, who to hire, in order to walk through that sort of process, so it could be much more tactical. Mentors can be a lot of things.
So part consultancy, part advice, part giving back. How do you structure it? It's clearly something that you're consistent at. That aligns with what your views are overall in kind of business and values. But how do you structure it? Do you allot a certain amount of time? Do you charge for it? How do you structure it?
So the short answer is no, I don't charge for it. I've been offered equity, which generally I pass on equity because I think I wouldn't be a good mentor if my interests aren't aligned and I wouldn't be able to be objective. But over the last year, I have looked at a couple equity opportunities. I haven't moved on anything. But no, it's not a commercial enterprise. It's very ad hoc for me. I don't set time aside. It's not my priority. My priority, generally speaking, is my business and my family. Not necessarily in that order. Really depends on how things are going. And it's very ad hoc. So it could be late night texts. It could be I fly, or I used to fly in the region and visit mentors for a couple days at a time, spend time in their offices, get to know them and their family, and better understand the entrepreneur, the founder, and what they're going through, and really try to have an impact on their business. Honestly, it comes from what I didn't have when I was starting my business, and I wish I had. And so I derive a tremendous amount of peace and a tremendous amount of, it's very fulfilling to be able to give back and to see that impact and to be there for them. I had a founder message me yesterday with their 2019 closed books, and it was profitable. And Amazing. He literally was like, I would not have been able to do this without you. You deserve an insane amount of credit.
Yeah.
And he actually, at the end of it, said, hey, do you want to join? I was like, let's see. I'm really happy running my business right now. I love my team. I love my clients. Let's see. It's really rewarding.
We've talked a lot about what you've achieved here in almost a decade, but you grew up in Florida. You spent a lot of time in New York. You had a career in the US before you came here, and I'm sure that's value that you're giving back as well. What's it like having a career in New York in advertising? What did you learn from there? And without kind of condensing too much into a short space of time, but what's your view on the US economy at the moment?
Okay. Yeah. But the more time I spend out of the U.S., the more respect I have for what the U.S. represents as an economy. It's the most diversified, robust, properly incentivized economy in the world. I mean, what the U.S. and what America has done is to create this perfect mousetrap for investors around the world to put money into, to have real courts, to have real IP protection, to have real risk takers. There's real bankruptcy laws, for instance. To be able to create this great economic marvel. It's got a lot of blind spots. It's got a lot of areas needs improvement, right? A lot of areas for improvement, but it is super resilient. And so overall, I'm bullish on it. I do think, you look at equities, you look at some of these other things that would have been interesting to see a bit of a reset in terms of values, but I don't think we're going to get that based on this market bounce. Maybe there's another. Maybe if we get a double dip in the pandemic, investors really say, okay, this is going to be prolonged. So let's see. I mean, for me, what my time in Los Angeles and what my time in New York gave me was really a tremendous fire in my gut. I just really wanted to build something lasting. I really wanted to build a work environment and to do excellent, good work for clients and to really build a business and a culture that I could be proud of, that the type of culture I would have wanted to work in when I was starting. And then more importantly, I think, and this is definitely New York, I think it was just wild at the amount of competition and how quickly and efficiently the market would compete within itself to get the right fit of services, the right fit of offering, the right pricing, everything. It was really, really, really spectacular how fast the market moved there. It took me a year or two to kind of reset to the region where it's a lot more of a, not casual, but a lot more of a measured pace in the region. And we're so impacted by the microeconomic events. We're impacted by regional prices on oil. We're impacted by, does Emirates and Etihad open new routes or not? Does that bring in more trade flow? How is tourism doing? What's the dirham to the ruble? What's the dirham to the yuan? What's the dirham to the euro? That was all new to me. So I think, there's two sides to that coin that I had to get used to, but I feel very thankful for the experience.
Amazing. Great to hear. But so I think there's fascinating comparisons, and it's always good to get someone's perspective of where they come from, both culturally, but also economically and from a business comparison. But you seem to not only compare the Gulf with the US, you also look at, and I know you've done business in Asia as well, you look at the kind of global economy. Yeah,
I think that has been the biggest, other than getting to see the growth and building lifelong friendships with my colleagues and my employees, and seeing just how their lives progress. Outside of that, seeing how global economies work and how they interlock and what makes them unique and valuable. And, the way that trade with Asia works from the Gulf, the way that trade with Asia works from the US, or, to have a front row seat. I was negotiating, one of our larger clients a couple of years back was a Korean company, a subsidiary of Hyundai. And we worked with them for a couple of years and brought them to the region. And to do that in the middle of like the Trans-Pacific Partnership, which was being negotiated and it fell apart. That was really interesting to have a front row seat on how that worked. And there's just a big part of me as an entrepreneur and just a curious person that got to see that, how it worked. I loved it.
Right. And you work, bringing back to where we are now, you're working from home, and you mentioned, that you put work alongside your family. Family is obviously, and I know you personally, that family is a very important part of your life, and it's led a lot of the external initiatives that you're involved in. Can you talk a bit about that and the charity work that you do?
Yeah, so I'm, really lucky. I know people have moved to Dubai and been unlucky in love. I heard it's a hard place to date, but I met my wife here. And you were with me the night I met my wife. I don't know if you knew that. You ran the 10K, I ran the 5K at the Nike run.
This is the one at Atlantis. What year was that?
2012.
Oh, wow,
First year, my wife, it was her first week. And I got really lucky, just, kind of a love at first sight type of thing. And we've, since gotten married and kind of built a life here.
Yeah.
And we have two amazing daughters. One is 4 and one is 1.5. And our oldest daughter has profound genetic epilepsy. So from birth was having sometimes 60, 70 seizures a day. And, as an entrepreneur, you feel like I'm good with ambiguity. I'm good with managing dynamic situations. And then to have such a jarring, profound event happen right in front of you to this being that you care for so much that I've dreamed about, our kids since I was a teen, since I could think about getting married and having a family. I've dreamed about these children. And so to have her fighting for her life, and to this day, she still fights for her life with this condition, it totally reframed everything for me. It totally reframed how I prioritized my life and business. And there were definite sacrifices. I'm sure if you were to candidly ask some of my colleagues, like, did I make work a priority for a few years? They'd be like, no, he was taking care of a child that could die at any minute, and we almost lost her many times. So I really put her condition on a forefront for me, or on a pedestal rather, and I've tried to raise awareness for that. It's a genetic epilepsy called SCN2A, which is a mutation in the sodium channel that causes severe epilepsy. To this day, there is not a real outcome. It's not a great outcome. A lot of our children die. I say children because they don't live the comorbidities don't always allow them to live into their teens or early adulthood. But I'm on the board of directors for the Global Foundation. We are very active. It's called Families SCN2A, if you want to look us up. We're very active in the greater sodium channel space, and we try to work with all the other foundations. And we're really encouraged. So I joined the board. It'll be, I want to say, 3 years this summer. And we had no drugs in the pipeline, no real opportunities. And now we've got drugs that are being developed just for our kids. So I think we could see cures in the next year or two, or at least really big therapies for our kids. And through that, my wife and I have gotten really involved in the regional rare disease community. So my wife, Jamie, organizes Rare Disease Day with a couple other moms through a therapy center called High Hopes Dubai. We'd love for you to support High Hopes. It recently got a not-for-profit status through Dubai Municipality and Health Authority, and I joined the board there. And then in the last year, I joined the Parents Board of Advisors for Al Jalila Hospital as well, which is the only pediatric hospital in the region. And they've really made working with chronically ill and sick kids a priority. They've done incredible work there. We're very thankful for both Al Jalila and High Hopes for opening their lives up to us and to taking us in with open arms and protecting our oldest child.
Incredible story. Thank you. And, a shout out to Jamie as well for being so involved in what you've shared with us now and over the last hour. Thanks, Will. Thanks for coming on Dubai Works. It's amazing to see how much value you've given to Dubai over the last 8 years and continue to do so. And
Thanks,
and good luck coming out of the current situation. Thanks, Will. Speak soon.
Bye, buddy.
Hey guys, I'm Richard Fitzgerald. This is Dubai Works, where we interview the business leaders making a difference in this great city.
That business with scalability was very interesting to me.
I like building something that has legacy.
That business with scalability was very interesting to me.
I like building something that has legacy.